DBS presents CNBC TV 18 India Singapore Connect.
Hello and welcome to DBS Bank presents India Singapore Connect in association with CNBC TV 18. I'm Shereen, Bhan. From a single office in Mumbai to a presence in over 350 locations across India, DBS Bank has spent over 30 years committed to the India growth story. As Singapore's largest bank and one of the world's most digitally forward companies, DBS Bank has been a pillar of the India-Singapore corridor. Driving this next phase of growth in India is Rajat Verma. He joined DBS Bank India in 2023, became CEO in 2025, and under his leadership, the bank has been recognized for its strengths in corporate banking and cash management by Crystal Coalition Greenwich. Rajat, thanks very much for joining us here on CNBC TV 18. It's great to have you back in the studio.
Thank you, Shereen, for having me.
Let me start by asking you about what the India growth story looks like to you at this point in time. I know in the last call, the global leadership did call out India, saying that the fundamental growth story remains intact. But given all of the volatility and flux that we see world over, how does India stand out?
I am a great optimist on the India story, and I have been for a very long period of time. I think fundamentally, if you look at all of the evidence on local production, on our exports, on all of the sort of structural changes that have happened in India over the last decade, maybe more than the decade, I think there's a lot to be optimistic about the fundamental growth story. The other thing, of course, is you have a massive aspirational population which wants to upgrade their lives, buy new homes, buy better food, buy more protein, etc., etc. So there is a momentum that you cannot deny, and that momentum will not go away irrespective of what trade sort of situations lie in here. So there's a lot of consumption demand that is going to keep coming in India, at least till it reaches a certain level. The curve of that is a little steeper. It'll start to saturate at some point in time, like it has in every other developed country in the world. But that is, I feel you still have a couple of decades before that happens. So I think fundamentally, given that that you have this inherent local demand, fundamentally you have structural stability and improvements over a period of time, I remain very, very optimistic that whilst there are issues around the world, it's not a steady state environment. Actually, I think India has got some significant de-risking elements to that, and therefore I remain very optimistic about the growth story in India, certainly for the next couple of decades.
Well, you know, the next couple of decades is a long way off, but let's talk a little bit more immediate, Rajat. And given the fact that you continue to be confident about the consumption story, manufacturing, of course, is the big other hope at this point in time. How do you see the bank positioning itself to make good this opportunity that India offers?
Sure. I think the banks we completed 30 years in 2024, so we've been around now for a while. We've got a network of branches. We've got various products in. We've got a full set, well, nearly a full set of what a universal bank will look like. And we are significantly invested in the country. We continue to invest in the country in the last 9 months of the last fiscal. So therefore, clearly, we see the opportunity both in India as management, but also as our shareholder in Singapore as well. So, but we can't be all things to all people. It is a very large market, right? And it's very competitive. And therefore, it is important for us to be able to focus on things where we can make a difference, where we can take leadership positions and add value to our clients. Because ultimately, if you do not add value to customers, you will start to lose out over a period of time. And therefore, that will remain an underlying theme, I believe, for the institution and for the time that I spend here as well.
You know, you talked about the competitive landscape, not just the domestic banks, but of course the large private and foreign banks that you're up against as well. So what do you believe are the sweet spots then as far as DBS is concerned? What do you intend to prioritize? What will the focus areas be for you specifically?
Sure. There are many. Let me begin with our wholesale bank, where we're well established. We established a branch in Gift City in July 2023 that is doing very well. I think it would be top 5 in its size already, although it's just been a couple of years since the time we started. It's inevitable as Indian companies grow in size that they need to diversify the source of financing so we can support that growth. I don't think anybody disputes that the growth of wealth in India is a monotonic, long-term opportunity for financial institutions to work with. So I see that as an opportunity for us. I see SME as an opportunity for us because SMEs not only, not only do they serve economic purpose, they serve a very important social purpose as well.
From a jobs perspective.
From a jobs perspective, and they're commercial. So I don't mean the CSR side of things. I mean the sort of the wealth creation, the industry creation that is coming from SMEs is actually very heartening to see. And the growth of Indian SMEs is absolutely essential for the long-term future of India. So I see us playing an important role. So I see that as an area of investment and an area where we can support SMEs who, for example, want to go overseas or want to buy from overseas. I see that as an area that we can be specifically more useful than some other institutions. Yeah, so we are invested in growth, but I don't think we should be invested in every type of growth that is available in the market. We have to choose and pick the areas that we feel that we'll be invested in from a very long-term period of time. We certainly want to have a view that we stay invested in a particular idea for a long period of time, because it does take time for many of these products to come through.
In terms of the loan book, you talked about how SME is likely to be a priority area for you. You also talked about fueling global ambitions and global aspirations of Indian companies who could potentially be looking at, foreign M&A at this point in time. Give me a sense of what the loan book is likely to look like over the next few years. What kind of growth do you work with at this point in time?
The way to answer this question is that this set of products that we are invested in, we want to take them to scale. We want to scale our SME business, and the evidence of that is that we've been growing nearly at about 50% or 40-something percent, 45% on our asset book in SME, which I think is of course, the law of small numbers applies here as you grow, but we have now crossed about 10,500, 11,000 crores on our SME book, so it is now reasonably substantial. And we see continued ability. Of course, you have to add some new products. You have to make sure that you add a few markets as you go along. So that's on the SME side, and I could go on. But so there is a growth. India is a very important growth engine for DBS globally. I think you'd hear that from our group as well.
Yes.
And therefore, we have certain sort of dimensions in mind as we go through our planning process. But what I will tell you is that what is much more important to me is that we understand that this is really just, ultimately, this is about how you compound over a period of time as opposed to how you grow. So it is less important whether we grow at X or X plus delta. What is more important is that we do not vary too much from our strategy and from the path that we think we can do in a controlled risk sort of setup. And therefore, it's really important that we don't grow too fast or too slow in any one year over a period of time, and that we get the benefit both at our top line and at our bottom line. So I'm very focused on both the profitability, so the risk-adjusted return, the cost-adjusted return of our business, the bottom line, but also at our top line. So I think they all go hand in hand.
You were talking about betting on growth engines here in India, and this is something that you and I have spoken about previously as well. The whole startup story, and link that to what we're seeing happen as far as the capital markets are concerned. How much of that is going to be something that you intend to prioritize?
Absolutely. I think the startup story in India is it's fantastic. And the number of entrepreneurs, it's also inspiring to meet many of these people. Some of them are 22 years old.
Yes.
It's amazing.
They do make us feel very old.
They do.
Certainly me.
And me as well. So I think it's certainly an area where we are very vested in. We are very vested in this as a group as well, elsewhere outside of India as well. And I meet a lot of startup founders, and I know you probably meet many more than I do. But from a bank, my question to them is, what do you need from a bank?
Yeah.
Often, this sector is largely equity funded, actually, right? Or even venture debt funded. Actually, equity funded.
Mostly equity.
Mostly equity funded. So that's not the primary need. I mean, many of them don't have a full CFO office. Sometimes they have, they share CFOs in outsourced manner and so on. And it's quite important to support them in other ways, because they are often not as organized, perhaps, as a large company could be. So the people who support them have to be willing to be a little more available and more proactive in the types of advice that they give, be able to connect them with other counterparties who can give them that advice.
Right.
Could it be tax? Could it be FEMA related and so on, anything that it could be. So therefore, there's a slightly different role without being advisory. That I'm not saying we need to be advisory. We just need to be a little more empathetic towards their requirements. And I think that is one of the things that we want to do as a bank, and that we are trying to do by setting up people who have done more of this, who understand the situation is slightly different from a large cap or a mid cap company.
Well, we are going to take a break here, but return to our conversation with Rajat Verma at DBS Bank right after this short break.
DBS presents CNBC TV 18 India Singapore Connect.
Welcome back to DBS Bank presents India Singapore Connect in association with CNBC TV 18. We're in conversation with Rajat Verma, the CEO of DBS Bank India, and let's pick up right where we left off. We've been, of course, discussing the robustness of the India-Singapore Connect and the deep association that both sides have had and building out this trade corridor. In this sort of uncertain global environment, the imperative to double down on this, I would imagine, is even more significant, is it not?
Absolutely, absolutely. We're natural allies.
Yes.
There's no doubt in my mind about that. And many of this dates back to cultural ties, of course, but also to economic ties. And that has increased manifold, I would say, in the last few decades. Of course, government to government has always been an excellent interaction, and the enhancement of India as a strategic partnership just very recently. All of these are inevitable outcomes of discussions that happen all the time between businesses, but also between governments.
Yeah.
As you know, some of the largest investors in Singapore are very vested in India.
And across different sectors. I mean, from infrastructure to telecom.
From infrastructure to telecom to consumption, everything.
Yeah.
And they have a deep understanding of the Indian market, and they continue to invest. There's a lot more interaction even in the corporate strategic side as well. And you see a lot of strategic companies who are pretty large in India, and are looking to invest even more. So I think the business and economic corridor is real. The social corridor has always been real, right?
Yes.
It's always been real, the amount of remittances, the sort of interaction of people going and all of that. But I think the other third sort of angle to this is the financial services angle, right? So Singapore is a hub for private equity, for venture debt, for financial institutions, for startups.
Yeah.
So I think that these are the sort of very natural sort of points of alliance, I would say.
You know, you talked about areas of congruence and convergence, and one of the, I think, opportunities that India is focused on at this point in time is how do we sort of make use of this move towards diversifying your global supply chain and what that potentially opens up as manufacturing opportunities here in India. How do you see that playing out, and what role do you believe that you could potentially play there?
I think, firstly, I think India has a real shot, to my mind, of being a high-quality manufacturing center. And there's so many recent examples of that, which should give us a lot more confidence. I mean, take defense, for example, where it's been proven over a period of time. So you can see that we should start to have a much greater, deeper belief in India's ability to be a manufacturing superpower at some point in time. And there I feel that the engagement with Singapore can be extremely useful, given that it's essentially not only through its own investment, but also the fact that it's a conduit for large investments, large strategics as a regional headquarters. I think the potential for engagement is immense.
As you look at the various metrics that you're working with today, and I know that you're constrained by talking specifics, but what are the metrics that you believe matter to you the most at this point in time as you grow the bank's presence, as you grow the bank's book and balance sheet here in India?
The one set of metrics which I'm very focused on always are the metrics that we hear from our clients. So whether it's the Greenwich survey that you mentioned in your opening, or whether it's our retail bank, where we keep looking at how our, our clients are viewing us through our mystery shoppers, etc., or how our complaints are trending. I think that ultimately is a barometer, and it's a statistical barometer over a period of time. So what you hear from clients on an absolute and a relative basis, because it kind of shows you a mirror from time to time.
Yeah.
The other sort of metrics, industry has comparables, and ultimately you need to see how you fare in that on a relative basis, because that is what gives customers the confidence. So let's take the case of wholesale banking, which is today the bulk of our business. So we spoke about loan syndications at the beginning of this conversation. So let's say you're doing loan syndications. How many you do, how many investors you have the ability to reach out, how much value do you put out for Indian companies? These are all measurable things over a period of time. And so we have to measure ourselves against those in an objective manner to be able to see whether we are really up there or not. The other angle is how your own people think of you as an institution, as how they think of our brand, how they think of our contribution to customers, to society, and so on. So I think taking a barometer of that is an important metric as well for me. How you grow on your financial numbers are important metrics for me, which obviously, I should have said that first. They are very important because we are financial institutions, we have stakeholders. So there is a set of things that one should look beyond the subjective in any assessment, and they're very clear in my head.
We did have constraints on liquidity, which the regulator is now trying to improve on. We've seen rate cuts happen. The expectation is that the rate cut cycle will continue. So how do you assess what's happening in the environment at this point in time, also from a regulatory point of view?
So I think if you think about the structural things that have been happening in India, let's say over a period of 7, 8, 10, 12 years, something like that, things like SMA came in. And then, of course, you had credit bureaus and things like that, which are now so instilled. So the structural changes are very profound. And that is the reason why to my mind, we have the most benign credit period that we've seen. Certainly, if I got my numbers right, and I think it's going to get better from here, 2.7 is our gross NPA, which was probably it wasn't this low for the last 12 years or so. So it is not an accident to my mind. And therefore, when when there is a view that, okay, something is overheating, I think we have to take those views very seriously because we are in a country where people need that credit. And credit needs to get cheaper over a period of time. Otherwise, it becomes a burden on the borrower itself. So we have to heed those very carefully. So I actually feel that the regulatory environment is absolutely essential for this country. Absolutely essential, a tight regulatory environment. Because unless you're strong, you're not going to grow. You're going to impede the growth, as we've seen in the past. So I think it's really, to my mind, I feel very positive about the regulatory environment.
No, absolutely. And as you pointed out, we need to ensure that while there is growth, that it is sustainable growth. Let me end by asking you about the big takeaway for you so far, leading DBS Bank here in India. What's been the big learning, as you've steered the bank towards this sort of new chapter of growth?
So firstly, it's very early days for me. It's just been a few months as a CEO. So I think I'll have many more learnings to come. The opportunity is very clear, I think, for me to see. How you harness your own energy and your resources towards that is the role of any management team. How you do that in a consistent manner to this point of accumulating growth consistently over a period of time and not having a sort of a zigzag path to that. That's the principle, but there are lots of learnings which go under that. So how do you make sure that your controls are robust, for example? How do you make sure that your technology is robust? Because all of this feeds into how, DBS is very proud to be the safest bank in Asia for a very long period of time. You have to keep living up to that reputation. These are, to me, absolutely essential safeguards, given the industry that we are in. Ultimately, this is an industry of trust. Right? So you have to be able to build on that trust and build your future on that foundation.
Rajat, it's been an absolute pleasure. Thanks so much for joining us here on CNBC TV 18, and we look forward to having a deeper, longer conversation with you through the course of the year. But thanks very much for being with us here in our studios today.
DBS presents CNBC TV 18 India Singapore Connect.